You are welcome to the fourth Global Change Investors Conversation. It's an interesting time indeed, and we remain thankful that we are living in this time of COVID-19. What makes it interesting, this conversation, is that, like I said just some few minutes ago, that we are meeting at a time when the budget speech, the supplementary budget, has just been presented, and many people have their own conversations, or many people had their own run commentary of what needs to be done and how it needs to be done. That is the time that we live in. Many are appreciating of what has transpired yesterday. And that's what makes this thing a very interesting conversation today, because we are meeting to begin to talk about some of those challenges that has come about. Of those that were speaking yesterday, or those that reacted to the budget, the supplementary budget yesterday, the business leadership South Africa acknowledged, yes, the budget was very good, but they also had a commentary where they were saying the minister did warn us, but the speech was as good as you and I would have wanted to hear, but it is not very clear. If we continue in the way we go, we will end in a debt crisis. And that will see us lose our sovereignty to our lenders. And they were asking the minister, in as much as they were applauding the minister, they were saying the minister did talk about the fiscal discipline that will save South Africa. They also then sent a caution in terms of that we need to more urgently, we need clarity and guidance on how economic growth is going to be delivered through the policy reform. And I think this conversation comes at that time where, as government seeks to bring some reform in our policies, we too in the cooperative movement can also come on board and say, what is our input in that space? It is time that we begin to ask that which concerns us. To what extent, as cooperative movement, will we also be part and parcel of those that will contribute to the growth trajectory of our country? Remember, it's not only about South Africa, it's also about our neighbors in the SADC region. It's also about the continent of Africa. The success that we generate in South Africa talks to the whole continent, because we are now interdependent. The chairperson of the Association of South African Chambers pointed at the astronomical debt to GDP projections that is likely to lead to further downgrade if we do not look at how the deficit, our budget deficit, is going to be funded. The political parties themselves, they also had a fair chance of reacting to what the minister has said yesterday. You know, in the opposition, the best you can do is not to appreciate, but somehow there was some appreciation, there were some challenges that the political parties raised. The GA said the minister's budget speech lacked credibility because it lacks details on the drivers needed to support our stalled economic reform agenda. The IFP said the speech is scant on details about how, as a country, will reignite the embeddling economy, leaving too much for speculation when certainty is required. COSATU was left disillusioned with the budget. that was meant to be capable of saying to us as a country, if it lacks these details, we are likely to go to economic depression. And they were saying as workers that, hey, it does look like as workers we are on our own because the policymakers have no idea of what they are doing. You and I, as we meet this afternoon, this conversation needs to steer us into a real conversation of finding solutions for our country's economic crisis. Because it's not only about us, it's also about the region and the continent. As I earlier alluded to, that we are interdependent. And we, through this conversation, will also be trying to find the answers to the question that the topic of today's conversation seeks to bring forth. Can cooperating individuals and enterprises serve as agencies of financial inclusion and economic empowerment even during the COVID-19 economic crisis? That is the question that our guest speakers, the two of them that we have this afternoon, they will be helping us to navigate through that topic. And I am honored this afternoon that both our guest speakers are with us. They are here, and I will be introducing them one after the other. There are two. It's Mr. Loyiso Matiko. He is in our midst, and he will be the one that will lead open in terms of presenting what will be happening. Secondly, we have Professor Munatingas Matele. She's also here in this conversation. She will be helping us also to answer this question and attend to it. And without wasting time, I will then introduce to you our first speaker, Mr. Loyiso Matiko, to this conversation so that you can then start with the presentation. Mr. Loyiso Matiko is a PhD candidate. As we speak now, he obtained his master's in economics and market policy from the University of Bologna in Italy. He is employed by the West School of Governance as a researcher on social security systems and management studies. He currently coordinates various projects between West School of Governance and the Department of Social Development. Furthermore, he also lectures public finance. Mr. Matiko is very driven and goal-oriented individual with a passion for development. That's why all of us will appreciate after he has presented that indeed he has a passion for development. And his research interest is on financial inclusion, social security, development of the marginalized groups, employment and inequality. And without wasting much time, I will then invite Mr. Loyiso Matiko to do his presentation. And before he do that, let's also agree, as before he comes on board, that effectively each one of us will have an opportunity to ask questions after the two presenters have presented what they have in store for us this afternoon. And we will also have our mic muted throughout the presentation so that if anything happens wherever we are, we are not able to disturb the presentations. And lastly, when an opportunity comes for us to ask the questions, we'll be able to raise the questions, raise our hands. Zoom allows us to do so, raise our hands, and then we'll be able to recognize each one of you. And those of us that are watching or that are participating in this conversation through the Facebook page. You'll also be able to raise your questions there, and we'll be able to read to our panelists, to the two guest speakers, so that they are able to also respond to your questions. That as it may, I hand over the time now to Mr. Loiso Matiko to start helping us navigate on this topic. Can cooperative enterprises serve as agencies for financial inclusion and economic empowerment in the COVID-19 economic crisis? Over to you, Mr. Matiko.
Thank you very much, Chairperson. I'm trying to share my slides.
Oh,
I'm not sure whether on your side you are able to view it.
Yes, I have it in front of me.
Oh, okay, all right. Okay, just give me a sec. Thank you very much, Chairperson, for the opportunity that you have given us to be part of this discussion on the topic that you have laid foundation on already. I would say it's not an easy topic, let alone during the period of COVID-19. It's not even an easy topic, even if it was before COVID-19 in the South African context, because of what we are faced in the South African context. Maybe if we're in Kenya or any part of the world, things will be different. Well, it is interesting times that you have also invited us, as it is associated with the International Cooperations Day, which is closely associated with this day that you have decided that we are going to tackle this topic. I will begin by looking at the tenets of cooperatives in general. Are you able to view the slides?
Yes.
Okay, all right, let me carry on then. Thank you very much. I will begin to just lay a foundation for...
Before you do that, are you able to make it a slideshow? Because here it's...
Oh, all right, sorry.
Yes. Thank you.
Is that okay now?
Yes.
Okay. I would like to begin by laying a foundation by looking at the cooperative in general, looking at the tenets of cooperative, because their nature kind of guides us, their nature kind of enables us to also answer the question that you have put across for our attention. Well, in general, the cooperative is a business that is known whereby individuals gather for the promotion of the common goals. The common goals will differ from economic goals. They will range from economic side of things to the political side of things, or socially. It basically depends on that particular group of people that you are looking at. Now, the International Cooperative Alliance will give to you that, will define it as an association that is independent, and people come together on voluntary basis to address those economic, social, and cultural needs. And these people have ambitions by such an enterprise is jointly owned and democratically controlled. Now, this definition is very important because from that definition, you are able to get the principles. You are able to get the principles that are driving cooperatives. You are able to get the values that are driving the cooperatives. It's also giving us the nature of cooperatives. It's also giving us the philosophy of the cooperatives, which I would like to put across that philosophy is a philosophy that says it is one for all and all for one, i.e. each individual should act for the benefit of the group, and the group should act for the benefit of individual. I think it is very important in us fast-forwarding and engaging on this topic to keep that at the back of our minds. Now, you'll get from this that I've shared that the meaning of cooperation is that isolated and powerless individuals, which I would like to name them the marginalized groups, can, by combining with each other, achieve advantages that were previously available to the rich and the powerful, so that they are able to advance not only materially, but they are also able to advance morally. In those words, cooperative business organizations that is owned by those who use their services. I think this introduction is important in taking us forward in addressing the questions. And you also have those values and ethics that basically drive corporations who are referring to self-help and self-responsibility, solidarity, democracy, equality, and equity. From that alone, also on those values, you are picking up that cooperatives are community-based and they're rooted in the democracy. They are flexible in their nature and they have a participatory involvement, which makes them to be well suited for economic empowerment and economic development. Because they are based on the powerful idea that together a group of people can achieve goals that we were not able to achieve or we cannot achieve as individuals when we act on our own. And again, I think the principles, I'm not gonna spend much time on them. I think it's principles that we are kind of familiar with them. Open membership and voluntary memberships, there is no discrimination in the nature of cooperation. All people are allowed as long as they are able to use the services that are being offered and they are willing to accept the responsibility of the members. Secondly, democratic and membership control. I think it's a good space for the members whereby they are able to take charge to decide which policies they want the policies to inform their decision making. So they're involved in design of the policies. They are also involved in the decision making. And it is solely the responsibility of those who are part of, who are the cooperative members. And I'm not gonna spend much time on the cooperatives, but sorry, on the principles of cooperation, but they are very important. One principle that is absent will then equate to the whole cooperation not being functional, but how important each and every principle is in this case. But I would like to put our attention on about two of these. One, it is the autonomy. It is the autonomy of the corporation and its independence. I think it is very important to maintain the institutional structure, the institutional integrity of the corporation, irrespective of where you are getting your funding, whether it's from any other sources or the government, if that is the case. But it is important to maintain that autonomy because it is what makes corporations to be what they are. And secondly, one that is close to heart to me is the education and training of the people that are involved, the members that are partaking in these initiatives. It is very important in the cooperative that we invest in the social capital and human capital of the members, because failure to do so will not be able to act effectively in addressing the mutual needs that we currently have as the cooperative. So these are very important principles for us to carry forward without making one principle more important than the other. But I was just alluding some of those principles. Now, again, it comes out as it came out from the definition, the concern for the community. What is it that is making us to meet? What is it that we need to address? What are the challenges? What are the common challenges that are facing our community? So these things come out strongly from the principles and the definition of cooperation, which therefore means in going forward, in being active, it means therefore we should not at any point in time function without being guided by these values, by these principles. That's how important they are. Now, I would like to put across something for your attention. One being that, sorry, just sorting out my documents. Okay, I'm good. I would like to put something to your attention. One being that globally, there is so much praise about corporations. There is so much acknowledgement about corporations. And these corporations, this acknowledgement comes not only from World Bank, comes from ILO, comes from, obviously, ICAM is part of that. There's so much praise about the role that has been played by corporations in their respective spaces. Now, it makes me wonder if such organizations that we look up to are speaking volumes about the role, the economic role that has been played by corporations, are speaking volumes about the social role that has been played by corporations in addressing poverty, in addressing inequality in their respective states. What might be some of the factors that are making us in the South African context not to be able to adopt models that are proven to have been effective? They are proven globally. They are also being proven in Kenya. It is just food for thought as I carry on with the discussion. Now, from this, you will note that cooperative organizations are found throughout the world, and they're as old as humankind. However, in the South African context, cooperatives have gained legal traction. The question is why? What is happening in the South African context that differs with the global sphere or other countries outside there? They've only, on our case, they've only been thought to be only for small-scale farmers, small and developing merchants, together with low-income earners. If you look at the, probably that what I've just shared now explains to us why there are so many cooperative farmers in the South African context as compared to the CFIs. You look at the disparities between the cooperative farmers and the CFIs that we have. And again, the question will be, why is there so much gap? There's certainly a recognition in the South African cooperatives that they offer an opportunity for improved communities to participate more meaningfully in the community. With that in mind, you can get that the mechanisms through which the impoverished communities can organize themselves and draw strength from their group is a mechanism that is proven to have worked. However, in the South Africa, the question is, what is it that might be an hindrance in this organism that you think that it will be very effective in the South African context? Because it is not the case. What might be the hindrance? Because there is so much unpopularity of the mechanisms that have been globally adopted through the cooperatives. Now, the question is, are South Africans really aware, rather than looking at the cooperatives for farmers, are they really aware about how cooperatives work? Are they aware about how they can contribute to their own economic empowerment and economic development of the societies? Are they aware how cooperatives can contribute to the social protection of the country at large? Those are the questions that we have to ask ourselves, because indeed there is enough literature that is suggesting and promoting cooperatives in South Africa, that they will indeed create a sound platform that will be useful for development of not only rural communities, but of also the semi-urban areas. So from that angle, you get that cooperative enterprises remain with a great potential to make valuable contributions on poverty reduction and improvement of the economic structure of South Africans. However, it cannot be regarded as a panacea to all socio-economic challenges. Now, with that firm foundation being laid, I would like now to come close to what you have I think that we are now in a better position with that background to come to what you have put in front of us. I would like to submit to you that co-ops can indeed be used as a breeding ground for economic empowerment of marginalized groups. From the economic standpoint, cooperatives play a crucial role in enhancing the economic well-being of their members. One of the visible economic contributions that they make is the improvement of members' income. That's just one of it amongst many. So they can generally provide an economic boost to the community as well. The economic empowerment is also directed at removing identified obstacles to full participation of the marginalized groups in the money-yielding ventures. People are very excluded financially. They are not exposed. They are not included to opportunities that will make them better off. And that requires CFIs to play a crucial role in including those marginalized groups to partake in such empowering initiatives. It is through these cooperative societies that it can become possible for the marginalized groups to obtain land for agricultural purposes and also for non-agricultural projects. Now, the most effective way to reduce poverty is also to expand the opportunities by which poor can do more for themselves economically, politically, and socially. Economically, the task is to help the poor gain the rightful access to productive resources rather, and appropriate knowledge for their use. Because it is pointless to have access to resources that you cannot be able to use. That's why on those principles that I started with, there is the component of education, so that people can be able to utilize, they've got the capability to utilize the services at their disposal. Now, this requires to directly address inequalities in the distribution of productive assets rather, namely through the redistribution of land and consciously reallocating finance to meet the needs of the poor. With that said, you can note that economic empowerment is vital and it is key to breaking the vicious cycle and to addressing the vicious cycle of poverty, inequality that we are currently faced with. This therefore makes cooperatives to play an important role in building the social capital and broadening access to services. So the democratic decision-making structure rather of the cooperatives give its own members the skills and the experience that they can be able to foster social capital, which can be used in areas such as civil society. With that being said, I would like to also flag out that the marginalized groups do also require enhanced access to credit in order to finance their farming, food processing, and trading activities. In essence, it is essential to increase access by the poor and powerless to the credit market. Now, with all that being said, there's a position that we found ourselves in before COVID. And there's a position that we probably wish we could be in after COVID. I would like to submit to you, colleagues, that historically we have seen, even historically in general, when it comes to pandemics, when it comes to crises globally, even in South Africa, we have seen the values of cooperation, solidarity, and mutualism experience an increase. They have experienced an increase in popularity. That's one component that I would like to submit. Secondly, it is also during times such as the cooperatives, it is also during such times that cooperatives have represented a strong, vibrant, and viable economic alternative during those times. And this economic alternative, it is still a viable option during our times of COVID-19. As the impact of COVID-19 grew exponentially, so did business closure, so did unemployment rates, unfortunately. So did poverty and inequality in our respective spaces. The impact is unevenly distributed for households, workers, businesses, further exacerbating the inequalities that were already existing in our respective communities. Now, before coronavirus, we have observed increases in inequality, on wealth. However, I'm not limiting inequality just on income and wealth as it transcends to social inequality. What am I referring to? I mean inequality in access to public services and social opportunities. With that being said, South Africans remain in an era of impoverishment, in an era of vulnerable to seen and unforeseen harsh socioeconomic factors as a result of COVID-19. I would say it has exacerbated what was there. And our very own people in our respective societies remain unable to caution themselves against most of these harsh factors, as they have limited or no resources at all. But there is an opportunity that comes with this. The few resources that they have and the COVID on its own. One of the opportunities is that people can begin to gather together with their own limited resources. They can pool the resources together and utilize them collectively. Because through that initiative, it is then we can be able to observe welfare changes in our communities. Again, in the context of these devastating effects of COVID-19, you will note that the roles of cooperatives have not changed a bit. During and before, the roles of cooperatives have not changed a bit. However, during these turbulent times, I would like to submit that the enterprise still remains beacons they still remain beacons in their respective spaces. The question is, how do we then tap into, how do we then step up during such times? What is it that we're doing before coronavirus? What is it that we can then do to step up during such times? Again, the question, as Muncha has once said that the question is not how cooperatives can help the poor, but it is how the poor can help themselves by forming or being part of cooperatives. There is enough room for people to come on board. There is enough room for people to develop their trust. There is enough room for people to put the little that they have so that we can be able to address the challenges that affect us all in our respective spaces. And there's also an opportunity for cooperatives to increase their bargaining power. There's also opportunities for co-ops to generate savings by providing members with goods and services at a more economical rate as compared to their alternative sources. And last part of this, before I give to Prof, I would like to also bring to our attention that even there is a great opportunity for the financial cooperatives in this regard during this period. It is a great opportunity for the financial cooperatives to, in fact, I would put it this way, that they've got a comparative advantage during this time. This comparative advantage is on developing and marketing new financial instruments that are specifically tailored to the needs of their marginalized groups, to the needs of their members in their respective spaces. I mean, I'll speak about it from working with members to help consumers stay financially healthy during such times. You can offer them more of a modified loans. You can offer them credit. You can create new loan products that meets the requirements or that meets the needs of the particular group. You can even implement fast-track credit approval procedures for urgent cases during these times. If it may, you can also allow credit payments to be deferred because we are living at times of this nature. So all these points that I've just put across ranging modification of loans to low interest loans for the members are very important during this time of COVID-19, especially when it comes to financial deepening. I think at this stage, that's where I will stop and give to Prof to come on board. Thank you very much.
Thank you, Loyiso, for that thought-provoking presentation that you have made to us. Colleagues, we still have Prof. Nathingas Matele, who is next as our guest speaker. She's a professor of economics at the University of Fort Hare. She holds a PhD in economics from the University of Gothenburg in Sweden. Prof. Matele is the Nedbank Chair in Economics at the University of Fort Hare in South Africa. She is also the Acting Dean of Research. Her research passion is on poverty. I think everyone will agree COVID-19 has exposed how far and wide the poor are much more vulnerable and marginalized. Financial inclusion, informality, and how the poor and the marginalized used finance. I think she is one of those that can best help us comprehend and understand today's topic, whether indeed cooperative enterprises can serve as agencies of financial inclusion and economic empowerment, even this time. Over to you, Prof. Thank you.
Thank you very much, and good afternoon, everyone. May I please, am I in a position to share screen?
Yes.
Okay, thank you. Just bear with me 1 second. And there we go. Are you able to see it?
Yes, you can just put it on. Yeah, thank you.
Sure, thank you. So I think Loyiso has laid the ground for understanding cooperatives in general and how they can contribute to empowerment. And I think he has touched quite significantly actually on inclusion as well, though not so explicitly, but I think he's covered quite a number of the principles that I think I was looking to cover. So that kind of helps me. I'm going to be a bit shorter. So I just to remind everybody, I know you did read the question at the start, but just to remind everybody, my focus, my segment of the presentation is going to look at cooperative financial institutions specifically as agents of inclusion and empowerment, because part of the question that we asked was looking at financial inclusion, and I think it's really important that we address that specifically. And before I just mention my outline, I think we are quite aware, for example, that small businesses struggle to actually get finance, and even when they do get finance and get started, they have very high attrition rates. So I think that looking at CFIs in this discussion is very important. And it's not just for small businesses, but for individual consumers as well. We know that the marginalized struggle to have access to finance. And maybe before I actually get into it, I think it might be important to just talk about inclusion and what we really mean by financial inclusion. Loyiso has talked about empowerment, so maybe let me focus on inclusion here. When we talk about inclusion, we are talking about the number of people who have access to formal financial services, so services that they derive from institutions that are registered. And what we see in South Africa is we have a very high level of people that are financially included. So 93% of people in South Africa are said to be included, compared to some of the African countries where you only have about 29% of people who are actually financially included. However, that number can be very deceptive. That 93% is deceptive, because in that 93%, we're talking about people who are included because they have mobile money accounts, for example, and may not actually have access to financial services. And perhaps more interestingly, we have that 93% of people who are included, but actually, even amongst the 64% who have access to bank accounts, a huge number of those people use those bank accounts as post office boxes. So a lot of people will open an account just to receive their salary or wages, or to receive their government grant. And as soon as that grant is in, then they collect it, and that bank account remains empty until the next time that the grant or the wage and salary actually come in. What that means is that we are basically using those accounts to receive money, and they're not, the access to financial services itself is not empowering the individuals, it's not empowering the small businesses that are using those accounts. So I think it's quite important to have that in the background as we talk about CFI. So I'm going to just use the abbreviation CFI to refer to cooperative financial institutions. The outline of my presentation is that I will just very, very briefly look at what a CFI is, because Loiso has covered quite a bit on the cooperative itself. I want to delve more into market failures in the financial sector, because it is because of financial failures in the financial sector that actually we have these gaps in the provision of services. So what I'd like to do is look at what are the most prominent market failures in the financial sector, and how do CFIs actually address these market failures? Having seen how CFIs address these market failures, how is this then affected by COVID? And how do we expect this to look different in the economy post-COVID? So what is a CFI? I mean, it's a financial cooperative, and Loiso outlined the basic principles of a cooperative. But in addition to the general definition that was given, CFIs accept deposits, CFIs lend money, but I'm also going to repeat the fact that they are member-based organizations that are based on commonality, because that is going to be very important when we then discuss market failures. And it's also important to distinguish them from shareholder banks, in the sense that the objective of a shareholder bank is profit, right, for the shareholders. Whereas for a CFI, it is a social objective. The objective of a CFI is the welfare of the members of that cooperative. So it's owned and controlled by members. And I think it's also worth repeating the fact that typically CFIs also run on a democratic basis. So the governance is democratic in the sense that each member has one vote regardless of how many shares they have. So it's quite important to bear that in mind. So into market failures then. So when we talk about market failures in economics, we generally refer to the failure of the pricing mechanism. So if you think about you going into a shop and buying a phone or buying a fruit or whatever it is that you're buying in the shop, you are buying that product or buying that service because you have accepted the price that is being offered. So although we don't see an actual physical bidding system that is going on, what actually is happening in the background is that by consumers and sellers deciding on the prices they're going to sell at and deciding on the prices they're going to buy at, they're actually engaged in a bidding process that allows prices to settle at a certain level by the market, okay? And so that market mechanism then regulates the quantities that are being sold, and it also regulates the prices at which these quantities are being sold. So consider, for example, when you have a sale, what is the purpose of a sale? Typically, the purpose of a sale is that the price at which the seller has put the product is not matched by the quantity that is being offered for sale. So those who want to buy are less than, so let me say the quantity that is being offered to be bought is less than that which is being sold. So when you have a sell, then the seller is recognizing the fact that the price at which they have set that product is not the price that the majority of the consumers would like to buy it at. So by reducing the price, they are engaging in a bidding process and then allowing the product to be at a price which consumers will then buy. And you see when prices go down, then people buy the product more. So that's the price mechanism in general. So when we come to the financial sector, we're talking about services that are being offered by financial institutions. So savings products and different types of loan products that include mortgages, personal loans, all sorts of products that are being offered. Those services, those products are being offered at a price. Now, market failure in the financial sector then arises when the interest rates, which is the price in this particular case, when the interest rate that is being charged is not what we would call an equilibrium rate. There will be people who will consume those products, but there will be people who are not in a position to consume those products because the pricing mechanism has failed. And because the pricing mechanism has failed, you will find pockets of people then in the community who will be excluded from the financial market. And the typical reasons this actually happens is, one is information asymmetry. Okay, so consider yourself, if you want to lend somebody money, you need to know what that person is doing. Say, for example, what is their job? Are they able to actually make enough money to pay you back? Even if they're able to make that money, do they have the integrity to actually pay you that money back? Simple questions like that. Banks, although they are institutions, face the same questions. When they lend somebody money, they have to try as much as possible to lend to somebody who they know is going to repay that money at the interest rate that they have set. Okay. Now, if they don't have enough information about that person, then obviously they have to deal with that by either denying that person access to the service or pricing that service at a level that incorporates the risk associated. So if we do that, then there is a certain group of people that will be excluded. Typically, we are looking at people with low incomes, people who are illiterate, people with low levels of education, both financial and general education. The reason is that the information that is known about these people is normally very low. It's worth mentioning, though, that in the presence of digital finance now, a lot of people now use mobile money, which technically can leave a digital footprint, and then of course allows the banks to have better information about consumers. And so things are changing a little bit, but information asymmetries are still there. And what we find is that people with low incomes, people with low levels of participation in the economy tend to be very informationally opaque. And so banks don't actually have information about them. Similarly with small businesses, they don't typically keep audited accounts. They don't have a record of their cash flows and expenditures. And so you will find that they don't have the required information to give to the bank for banks to make decisions about lending to them. As a result, you find that such groups are typically excluded or will be marginalized in the financial sector. You also have at play externalities. Externalities are basically events that are not necessarily in the financial sector, but will have an effect on decisions that are made. And a simple example I can give here would be probably rigidities in the economy. There will be problems, for example, in providing documentation. You need your ID, you need a passport or some form of identification to open an account. It may be illiteracy, where people cannot understand the rules and regulations that are associated with the products that are being offered. So there are things happening outside, but that have an impact on financial access. Then you've got moral hazard. Moral hazard is related to financial asymmetry. This is a case where when a bank lends money, when a financial institution lends money to someone, then that person uses the money in a different way from what they actually said they would when they borrowed that money. So then what happens is that when you have illiterate people, the poor, most marginalized groups in all ways that you can think of are very difficult to monitor. So the monitoring mechanism becomes very expensive because, and as a result, amongst those types of populations, then the moral hazard is high, which means the transaction costs associated with providing services to those groups are also high. Consequently, you find that they will be excluded. And also when you find a lack of competition and market rigging, that can also lead to financial exclusion because the financial institutions that have power can set the prices in a way that excludes certain participants in the markets. I think we are familiar with some of the investigations that have taken place in the financial sector in South Africa. Recently, we had the investigation, the Competition Commission's investigation into a cartel in forex markets. So those kinds of things can actually lead to exclusion, financial exclusion of marginalized people. Okay, so I've sort of alluded to some of what I have on this slide. So when you have market failures, then what happens is that you have under provisioning. So you will have a very active population accessing products. So think about products like mortgages, products like financial loans, products like furniture loans, and so on and so forth. Those products will be there, but these are products that only people with a certain level of income can actually access. The products that are needed by the marginalized, are not, they're not available. So, I mean, just because somebody has a low income doesn't mean that person doesn't want to buy a house. So there are no mortgage products that are there for such marginalized groups. And think about savings accounts, for example. Most savings accounts they attract charges, right? Or they attract a minimum savings amount, which marginalized groups may not be in a position to actually have. So that makes it very difficult. Another thought is that services may exist, but most marginalized groups may live in geographically very excluded places. If I can make reference to some of the work that that Loiso just did for his PhD, we find that there are people that cannot get to an ATM without traveling about 2 hours. Now, that obviously means you're not going to frequent the use of an ATM. That's just a simple example of lack of access to existing services. So you find that rural communities, for example, may be quite marginalized. And a simple example I can give is we talked about the fact that 93% of South Africans are included. But actually, when you look at the rural communities, only 60% of the, sorry, not marginalized, but included, but only 60% of the rural communities are actually financially included. So there may be services, but they may not actually be physically available to consumers. I have alluded to the cost of products for marginal consumers, so I'll gloss over that. I did mention that they're informationally opaque in the sense that it's not easy to get information about them, whether we're talking about small businesses or talking about marginalized individual consumers. The fact that they have small transactions means that it's very expensive to provide services to them. So let's take a very basic transaction. I want to get a loan. I don't know if any of you have ever attempted to apply for a mortgage. Think about just the sheer volume of paperwork that you actually have to complete. And you have to do that for every loan that you take. Now, if you're lending somebody 1 million, that's probably worth it because the interest you're going to get on that 1 million is going to cover the cost of providing that transaction. Okay. But remember, you have to do the same type of paperwork for somebody that wants to borrow 500 rands, which means the cost of providing that service might actually be more than 500 rands. And so it becomes quite expensive to provide financial services to marginal consumers. And of course, they have higher risks, which I've already outlined in what I said. So then, having looked at those market failures, how do CFIs actually address these, and what place do they play then in the process of empowering consumers? I think it's really important to recall some of the principles that Loiso mentioned, because they're important in looking at how CFIs actually deal with market failures. The first thing is that if you look at shareholder banks and other formal institutions, when they lend money, you need some form of collateral, right? So collateral is a way of dealing with information opacity. So I don't know much about you, but you can tell me that you have a car or a house or some other asset, which if you fail to pay me back, I can sell and recover my money. Now, the marginalized people don't have those resources to provide that collateral. CFIs, on the other hand, typically can use social capital, because as we have already said, as cooperatives are formed around common bonds. So people that work in the same industry, for example, farmers, or people that are in a particular geographical area. And as a result, then you tend to know the people who are part of that community. And therefore, the cost of default is very high for the person who would default, because they are known in the community. So the social capital is then used as a collateral. And as a result, you find that there is higher or better repayment rates for CFIs amongst marginalized communities than there is when we're talking about shareholder banks. And also it reduces moral hazard. So moral hazard is what I would call the problem of lemons. Or if, for example, you want to decide who to lend the money to, like I said already, in the market, you need to know some information. You need to know, is this person able to pay me back? But because you're a member of a cooperative, you are known, and your savings are also likely to be part of that institution. That also reduces the effect of moral hazard. In other words, we are making better decisions, picking better borrowers, because you have soft information which you have collected because you know the people that you are lending to. And also because of pooling, then there is reduced transactions costs. And that pooling also of resources allows for the mitigating effects of scale. Remember, I said that when you have small transactions, the cost is very high, because you now have to collect so much information in order to be able to make a decision to borrow. And I'm running out of time now, so let me just look at empowerment and very briefly then go to the question of COVID. I think that Loiso covered empowerment in the general sense, but I just thought that it's important then to allude to the fact that cooperative financial institutions, as a subset of cooperatives, have a special role in addressing empowerment, typically because they reduce income disparities. They allow marginalized households and businesses to smooth consumption. What do I mean when I say smoothing consumption? Well, they allow access to credit so that marginalized communities don't have to go without food, without education, without health at times when they don't have an income, because they can borrow from the CFI much easier than they do from a shareholder bank. So they can smooth consumption. And also the very fact that CFIs focus on stakeholder welfare is very important in empowering communities and empowering small businesses. The fact that these are common, the owners of the cooperatives share a common bond also means that there is going to be an avoidance of agency conflicts. And perhaps also to mention that another issue is that you don't have the principal agency problem that you might have in an ordinary or mainstream bank, for example, where the goals of the owners of the bank may actually be different from the managers, because typically cooperatives are governed by the owners. And then I'll move on now to the issue of COVID, which has partly been covered by my colleague Loiso. So my thoughts that I'm reflecting here on the relationship of COVID and CFIs is really based on what has happened in times of crisis, because we actually don't know. We're living through COVID now, but the best way to look at it is to compare what has happened with CFIs during crisis and post-crisis. Okay, so the literature suggests that CFIs have reduced loan supply rates less than shareholder banks. In other words, they continue to lend at a higher rate than ordinary banks during crisis. Loiso mentioned that evidence suggests that during crisis, during financial crisis and economic crisis, we find that the cooperatives tend to strengthen, and both from a formal and informal perspective. And as a result, you find that people turn to cooperatives for financial needs as well. So it is actually a very good time for CFIs to start expanding in the South African context. I know, for example, there is a move towards opening a number of cooperative banks, and this is the environment in which such banks tend to thrive because of their focus on welfare. But also they tend to fare well because they have a stable deposit and a business deposit base. So consider a cooperative is based on member contributions, right? And these member contributions will typically continue during a crisis, because they are I think, let me just say, they typically continue during crisis, whereas what you will see in the case of a shareholder bank is that people will start to de-save. Okay, so they have a more stable base, they have more stable business strategies, and they are less fragile in business crisis. And therefore, an event, if we're going to call COVID an event like COVID is a very fertile ground to grow CFIs. The disadvantage, of course, is that they are less diversified. So let's say, for example, COVID goes on for a very long time, and I think it's now verified that a lot of people are going to lose jobs. And a cooperative, say let's say in the cotton industry, is relying on everybody that is in the cotton industry, and the cotton industry is hit the most because of COVID, then what we will see is such a cooperative is likely to close, because then the majority of its people will be affected just because of the industry concentration that cooperatives tend to have. Evidence again seems to suggest that CFIs gain markets and gain market share during crisis for the same reasons that I think we have already outlined. And so in summary, I would say that CFIs should and are likely to play a greater role in the economy post-COVID, because one, there will be a larger pool of people that will be marginalized, so their role becomes more important. Two, there will be more people that will be unable to borrow from mainstream shareholder banks. So there will be more people requiring to borrow from CFIs, but also caution, because of a lack of diversification, CFIs need to be careful that they mind their market and they're able to make good loan decisions, especially in cases where they start to lend to non-members. Some of the research that I've done in Swaziland shows that the most successful CFIs are the ones that continue to lend to members only, but that limits the role they can play in empowerment. The successful ones tend to lend to non-members, but through existing members, because remember that soft information that we are collecting is the foundation for ensuring that we have social collateral to increase the level of repayments amongst members. I think I have gone long enough, and I will just open up for questions and answers then. Thank you.
Thank you, Prof, for the presentation and some of the challenging ideas that you have brought forth on inclusion and on empowerment. Colleagues, we are in this conversation together. This is just a platform created for us to engage with the topic, to engage with our guest speakers, Profs Smatele and Loiso. They are here with us. And it's an opportunity for us to start engaging and interacting in a Q&A session. And it's an opportunity that if you have a question, you can raise your hand through the Zoom, and those that are watching this or participating in this proceeding of the conversation through Facebook, you can also send your question on the other side. We'll be able to have our guests be able to respond to them. If you have a question, it's an opportunity now for all of us. You just raise the hand and then you can throw the question directly to both of them to one of them, so that they can be able to help us understand and unpack what this topic requires, or some of the clarity-seeking questions. I am tempted, as I'm waiting for some of the hands here to be raised, because I know you have got some of those questions that you want to ask them, particularly about financial inclusion. Prof raised that it's not the fact that you have an account that you are included. It might just be a conduit through which you receive that which is due to you. But that does not mean you are financially included, because you are not able to access the services that are there in our financial institutions. Loiso raised the issue about, if cooperative models have been proven to have worked in the whole world and they are acknowledged by all these big institutions, why is there a slow adoption in our country? And I think that is a question that Prof and Loiso managed to raise the question, but he didn't manage to provide the answer. And possibly one is tempted to say, as global change investors, yes, we started in 2017 with an intention to lead investment and pursue intergenerational wealth creating opportunities. And you look at it now, not many of those that you would have thought would jump in and join, they have not joined. Why is it still like that, even when an opportunity like this one exists? Prof. Loiso, why are those that are economically marginalized, even when an opportunity to cooperate, like a platform we have created within GCI and many other cooperative enterprises, why do we still have very few people that are joining these cooperative enterprises? You can answer whichever way interchangeably. The platform is now open for anyone who have a question to raise those questions. Over to you.
Maybe I could just give a quick response, and then Loiso can also come in. Why do I think people are not cooperating? I think I would say that although South Africa, one of the things is that South Africa has a very deep, relatively deep financial markets. And sometimes I think there is the assumption that because the markets are very deep and very well developed, that everybody is actually aware of the services that are being offered. Again, I think I like to speak from a point of evidence, and some of the research that we have done indicates that actually people may not know about the existence of some of these services. So that's one. The other one, I think, is the creation of an enabling environment is very important, and it has to be a deliberate policy stance. And I know that there's been a recent change to the Cooperative Act, which affects financial institutions, which obviously is a process of creating an enabling environment. But I think that is still a very young process. So in my view, I think there's a lot of need for financial literacy training in South Africa. That's the evidence that we seem to find out. And then the last thing that I think could be contributing is that there is out there a very huge informal financial market. And it's very interesting. I mean, I mentioned that South Africa has very highly developed financial markets, very comparative to Western world financial markets. But what you will find also is that there's a very high level of use of informal finance in South Africa, even by people who use formal finance at the same time. So think about the popularity of stokvels, for example. A stokvel in a sense is a cooperative, is it not? It is a financial cooperative, but it's functioning on informal rules more than formal rules. You find a lot of self-help groups, and they tend to, the typical ones that I have encountered in my research is women's groups, and they contribute as little as 10 rands, as little as 50 rands per week, which probably would not be something that an organized institution might see as a viable savings. But actually, for these smaller groups, you know, this tends to be a source of capital, and some of them have actually grown in these rotating savings accounts. When we did a survey last year, we did a survey in Johannesburg, Pretoria, Durban, and East London. We found that some of them have actually built houses on the basis of these savings and rotating savings and credit associations, which to me are modeled on cooperatives, but actually are not operating as cooperatives. So I think the cooperatives are in a sense running in South Africa. They're just running informally.
Loiso, you want to make an addition as we move to the next question?
Thank you very much. I think Prof has touched on some of the responses that I was going to give. I think one of the things that are important, as she has said, if you look at the legislation on its nature, is it enabling for the cooperatives to function well? Is the legislation enabling? You ask yourself, do we have a strong legislative support? I think those are one of the things that have made the cooperatives globally to be successful. But in the South African context, contrary to as compared to the rest of the world, what is our state? Is it conducive? Is it inviting people? Do we have enough support that is inviting people that are marginalized to be part of such initiatives? In terms of the tax laws, again, are they enabling for people to come on board? I'll make an example of countries such as Spain. If my memory serves me well, they were taxed about 10%, contrary to the 28% that was taxed in the corporate enterprises. So there were varying degrees in terms of the tax. The tax in this nature was also enabling. It was inviting for people. Other factors that I would like to just put across on this, I'm looking at it from different varying degrees. There are issues of trust in our communities. Is trust issues making people not to actually invest in such initiatives that have got long-term goals, well-being of the people in their respective spaces? Again, having said that, you've got models such as the stokvels, which are working very well in their respective spaces. But I think there's also a culture in our society of consuming and consuming. I think there's a culture of consuming and consuming, and as much as the people are saving in their respective spaces, but as Prof said, they are saving using informal mechanisms for those operations, and they're quite comfortable with that. Now the question is, how can we break away from such challenges? Thank you.
Thank you. There is a question in our chat room here, which is asking, does COVID not present a compelling case for consumer cooperatives whose purpose will be to help consumers stretch their rent during these trying times? I think you give an example of the Soweto Business Access as one such consumer cooperative that might be a platform for these consumers to access their goods and services. Is asking, does it COVID present that compelling case for consumer cooperatives to begin to make their rents stretch among themselves? Dr. D. Chacha, your hand is lifted up. Mwahludi, your hand was lifted up a few minutes ago. You can also unmute your mic as our guests are attending to put this question on the consumer cooperatives in particular. Over to you.
Yes, thank you for the chance. This is Chacha from Kenya. I'm currently attached to a SACCO, a Savings and Credit Cooperative in Kenya called Cereal Growers SACCO. This is a SACCO serving purely farmers. And when I say farmers, it's specifically the small-scale farmers. We have come up with this particular SACCO to serve farmers who have challenges in finances, to finance their activities. Now, my concern is about the policy reform. I think this is a good platform where I can address that. It is high time we support the policy reforms, especially in terms of the formal sector of banks, where they encroach to SACCO products or cooperative products, which are given by are being offered by the cooperators. You will find that this environment is not fairly presented when it comes to cooperatives, because the cooperatives, they have no muscles in terms of financing some competitive products to members. But you will find banks, because of the financial muscles, they normally outfit the cooperatives because of that. So I think that we need a policy reforms which enables all cartels, the banks, from encroaching to the cooperatives environment. We need a well-cut boundary. Another area we need a policy reform is if the government can support directly the cooperative, so that, because you will find it, the cooperatives, most of them deals with the poor people. That is where the essence of savings is appreciated, and that a small credit is appreciated by members. So I think we need a policy where we can be supported by the government, the relevant government, or a clear policy where we can be getting some donations from the government so that we can advance the improving the poor people at the low level. Thank you.
Lois or Prof. Smatele, are you also able to zoom into Mputi's question about COVID presenting a compelling case for a thriving or a successful consumer cooperatives? JV, you are noted. You can also unmute your mic as they contribute to that question. Prof?
Yes, I think let me start with the question on consumer CFIs, because I think I alluded to that in my presentation. in that I think COVID does actually present a very compelling case for different types of consumer financial institutions, but more so, I suppose, for consumer, for CFIs, but more so for consumer CFIs. And again, I think this is because as the incomes of the consumers, the marginalized, actually dwindle, they are looking for a place or a service that will allow them to pool their resources together. Because one of the issues, as I alluded to in my presentation earlier, is the issue of transaction costs. So when consumers are able to pool their resources together, then they are able to reduce their transaction costs. A simple example for a consumer CFI is bulk buying, right? That's something we do every day. The wholesalers, go, the spaza shops go to the wholesale and they buy things in bulk and then they come and resell, right? That's the simple mechanism. And so when you have a consumer CFI, you are getting people who have small incomes who can pool them together to buy consumer products, as an example. If I give an example of I'm trying to remember the name of the cooperative in Swaziland that we looked at now. But basically what they do is that they started off as a cooperative that where workers used to put money together and keep it until Christmas. And then of course, then they'll go Christmas shopping as a group, and then they'll buy a lot of groceries, right? And that grew from that, became a very big consumer CFI as it started to actually extend credit to non-members through members. So I think that the very fact that people's incomes are going to decrease and you're going to have a lot of people with low incomes who still need to maintain a minimum level of consumption actually means that there is going to be a very fertile ground for, I think, consumer CFIs. And then on the other comment, I think it was a comment really, and I think I couldn't agree more, that there is need to provide some sort of policy reform to support CFIs. The only thing perhaps that in addition I would like to reflect on is just to think about what you said, that governments, for example, providing funding. And I think it's an issue of where governments tend to position themselves in the financial sector. If you look at most countries, you're from Kenya, I'm a little bit, just very little familiar with the Kenyan economy. And I know that mobile money, for example, is a really big thing in Kenya. You have M-Pesa, which has almost, become a word by itself globally. And so when you start to think about the fact that financial markets are typically capitalist, and you would like governments to sort of dig in and provide funding, you need to be careful on what basis the government actually provides that funding. Do you want to be a cooperative, or do you want to just be a social entity that is being funded by government to provide a social service? So I think that boundary needs to be very well defined when we are talking about government supporting cooperatives. When we have economies that are typically capitalist, as our economy here is, and the same with the Kenyan one, I think, in my view, what might help cooperatives is more the supporting policy environment more than the funding itself. Perhaps even training on how to use the funding, because there are very successful models of CFIs that can actually be adopted. And perhaps my last comment on that would be, yes, I agree on the fact that bigger businesses, bigger banks, shareholder banks, are actually encroaching, as you call it, on businesses of cooperatives. I was just reading an article actually yesterday where they're talking about how peer-to-peer lending, lenders who are now encroaching on the business of CFIs and other providers of marginal financial services by actually creating partnerships with shareholder banks. So they're dipping into the business of the cooperatives and dipping into the business of the shareholder banks at the same time. These are new, and you can't stop innovation. This is innovation. So my suggestion would be cooperatives, how can you dig into this new innovative markets in order to reduce your transaction costs and actually take advantage of these existing markets?
JV, you had your hand raised up. You can unmute your microphone and then present your question.
Oh, yes. Thank you, Mr. Ndo. I think my question is just based on if, let's say, one wants to join, and then what benefit would one realize in future or in near, or is it a long-term investment? What is the difference between investing in this institution as compared to investing on the bank? Yeah, just the clarification of the benefit as compared to a conventional bank. Okay, thanks, Mr. Ndo.
Thank you, Prof. Loiso. What are the benefits of joining a cooperative enterprise or a cooperative financial institution as opposed to going straight to commercial banks as we have in our country?
So do you want to pick that one?
Okay, coming in. I think again, the benefits will come in the form in which the CFI is set. Because I always ask the question when you speak about the CFIs and the traditional banks the question is, what is it that you are presenting that differs from the traditional banks? So the benefits basically, one, it comes in the manner in which it has been set, in the manner in which the financial services that are being offered are modified to meet the needs of the specific groups. Again, it comes back to the principles that we spoke of. You've got so much independence here on the CFIs. You are in charge of the kind of policies that you want to see. You are in charge of how you want the CFI to be driven. Therefore, you understand very well the circumstances of the people in your area. Hence, you will be able to modify the offerings that you are making in the space that you are operating in. So I think in general, based on the needs of the community, the benefits will differ on how the institution or the CFI has been institutionalized or it has been organized to differ totally from the traditional banks. For example, through low interest rates, there has to be a distinction between the CFI and the traditional banks. There has to be something that drives, that interests us, that attracts us to be part of it. And I think on those grounds, that will be an important way of inviting people to be part of those.
Maybe I can also just add a small thing to what Loiso has said. And I think that maybe Mr. Shirwana also would like to answer to this question, given the objectives of the GCI. I think maybe he would also make a good contribution to this question. I wanted to also say that I think it's also important that we look at, although the fact that cooperatives are not meant for low-income consumers, there is that role that they play in empowerment and social welfare. So I think we should not forget the role that is played. The space for CFIs from an economic perspective is created because of that gap in the market. So it's a niche, if you like, that serves a particular population. So I think that cooperatives work very well for people who would like to invest, but do not have the high-powered resources to invest in a big company, right? And I like what our host said at the beginning when he started. He talked about building generational wealth, right? So that's very important. You are able to build generational wealth through a cooperative by not having to have such a huge outlay, because in most other in most mainstream investments, you need a huge outlay. Whereas with CFIs, depending again, as Loiso has said, on the nature of the product, the nature of the business model, you can build wealth by actually depositing very small amounts of money. I think that's important to not forget the sort of social aspect of CFIs. They're more, in most of them function, or at least start off more or less as social enterprises more than anything else.
Yeah, I think in addition to that, there is also one element I think that we need to bring forth to this question. One thing that is of interest in a cooperative enterprise, particularly a financial cooperative, it's cooperative financial institution. You are a member of that cooperative. Secondly, you are a shareholder. And I'm using shareholder in a very loose way here to bring forth this point that says, whatever charges that you get charged as part of you consuming the banking services, those charges goes back into your pocket when there are times for you to be able to receive either the low lending rate, because the money that you have been charged when you were for using the banking services, by the next time when you need to have access to either some loans or investment opportunities, you have your investment with a high interest rate, but you also have then you are lending with low interest rate by virtue of you being a member or a shareholder in a cooperative financial institution. Whatever benefits, if somehow, I think as Loiso did indicate earlier on, that cooperative enterprises, they are established for a social good, with the intention to derive or achieve social objectives. And in this case, I mean, we are looking at intergenerational wealth creation. Amongst us Africans in particular, there is not much of efforts that we are exerting in looking into the future. That's why majority of us, possibly even those that are attending this conversation today, if you have parents, very few of our parents, if they decide to go to the other side, separated from this side by death, you look into their bank account, you'll find there's literally very little that has been left for this, for the family or for the children, the wives, the husband that are left there to be able to live beyond those that were like what? Breadwinners. But we are beginning to say it is possible to look at intergenerational wealth where we build in the capacity of the current generation to invest in bankable and profitable enterprises that will be able to generate sufficient income or sufficient profit to a point where even when the current members are no longer there, their children are able to be sustained. And that's the reason why we need to invest in profitable businesses that generate those profits to be shared amongst the members. I think I would have contributed to that. There is also a question here. I think it's a comment and a question. We can be able to look at that. We have already moved beyond 1630. I think we can attend to this, to these questions. And if there is no any other one, then we can move towards closure. Moathudi said cooperatives were being agricultural focused. I think it's he said on co-ops being more agricultural focused. This is informed by a culture that emerged out of apartheid era where co-ops were in this sector. The other reason contributing to failure of co-ops to thrive in South Africa is how government has mishandled this sector, but also co-ops apex body itself that allowed partisan politics aligned to the ruling alliance. I think it's much more of a comment. You can also add your comments. I think there is Badia. I've observed how money never actually exit the village and gets banked in houses. They lend to each other. They are able to finance funerals without going to the banks. It takes 2 hours to get to town. I think it's another commentary, Prof, alluding to what you had raised, that, I mean, those that are in the deep rural areas, in one way or another, a number of them have difficulty of having their money staying in that account, because the cost of accessing it the next time that they're in town, it's too much than just withdrawing the whole of it and put it under a mattress. It's much more comments that we have rather than question. Is there anyone with a question or that I have not noted? I think these are the comments that we have received. Anyone with a question?
Yeah, I just want to ask one question. I'm sorry, I can't see where I'm supposed to raise my hand. It's Mope. I'm not sure if I'm audible.
Yeah, you're audible.
Okay. Prof. Lois, so I just wanted to ask quickly whether this CFIs, they are made provision for under the National Credit Act. And just a little bit if they are covered. And I see South Africa has adopted a twin peak model, whether it's going to make things better for them, or or maybe it's still the same, or going to make things worse for them.
Over to you, Prof. Lois.
Sure. I think that the National Credit Act covers in general credit, how do I say, borrowers and lenders in the country. So it's an act that covers all lending and borrowing within the country without specifying sectors, and it's formal lending that I'm referring to. But also I think it's important to remember that what the provisions that you're talking about have been covered by the Cooperative Financial Act, which I think was amended, is it 2017? It came into effect 2018, I think, the most recent amendments. So there is supporting legislation, and that particular, the 2018 legislation, was to cover the provisions that are raised under the Twin Peaks model, which you are referring to. I don't know if Loiso has anything to add.
I think you have covered Mope well on this point.
Thank you, Prof. Thanks, Loiso.
I'm not seeing any hand lifted up here. It does look like the issues that people wanted to engage with us during this conversation. I'm not sure if there's one hand lifted up. Nigel, your hand is up. You can unmute yourself and just ask. Possibly you might be the last person to talk to our panelist or our guest in this regard. Over to you.
Yes, thank you, Chair. I think this is my last part.
Okay,
maybe.
thank you.
Are you getting me?
Speaking.
Oh, possibly Nigel, just hold on. Let's have Mr. Chacha raising his comments and question. Then you'll then follow. After he has raised that, then when our panelists or our guests respond, they will respond to both of you. Mr. Chacha, over to you.
Oh, thank you. Now, I have two issues to raise as challenges. One is the interest we charge on CFI, which is seemingly lower than the banks. Now, this is not able to finance, to create a fund for members, because we are supposed to create a revolving fund out of the savings and also the interest we create to advance credit. Basically, we are limited. We cannot borrow from outside, maybe from banks, because banks' interest seems to be higher than the CFI. Now, that one limits automatically. And another contemporary institution, financial institution. Now, maybe I can be assisted, because we advance credit in these cooperatives with a multiplier of 2 or 3. With your experience, can I know how you go about it so that I can also explore that? Secondly, there is a challenge of management. There is this principle of democracy in management. That is why Professor was saying about 1/4, one member, 1/4. You find that in management, you can be you can be within the board of directors to manage regardless of your savings. But recently, we have seen this one has a limitation because assuming you have 1 million savings and another one has 10,000 savings, definitely this disparities means it shows the member with 1 million holding a savings has more say that the one with, or has more interest in the cooperative than the one with the savings of 10,000. Now this also, it goes without saying that the one with 10,000 savings has less opportunities to manage the cooperatives than the one with a savings of 1 million. So the principle of democracy is supposed to be moving. Yes, it is supposed to be moving, and means and something else. It needs to not to be open like that you manage. It has no autonomy. We cannot hold any longer about it is. It is a challenge, and I will want to see how you go about it according to your experience over there. Thank you. That is what I had.
Nigel, before our guest speakers respond.
His mic is muted.
Nigel, you can unmute your microphone. Thank you.
Okay, no, sorry. No, mine was more of that one of the trading that were the previous person asked. I remember when we did a benefiter compliance training. Credit Act actually covered CFIs, and it's now fully covered as long as all lending of money is transacted. But now, what I wanted to ask is just a simple but complicated question, which is looking at the current holding or positions of CFI in this portfolio of savings. How has it been, or how can it be made to be, let's say, a bankable or a viable vehicle for members to maybe not only start with, but also to invest in and get full profit? How that point is usually getting somewhere where we are asking a lot and doing more, but then hitting the wall on how is it going to be viable? That's where I wanted to ask.
Thank you. I had a little bit difficulty in hearing the question. I'm not sure if our guests had managed to pick that one up.
I picked the last part of it, where I think he was talking about the I would interpret that as business models that would be profit making in the CFI sector. Am I correct, Nigel?
Yeah, that's which is feasible, because also the 20 is a bit, I don't know, for a starting CFI to use FinTech as for the start go, it's actually hitting the wall on many CFIs, if I can say. So that's why I'm just asking you. You are such a right, a feasible we can use to pick up that before we can use a model that is constrained, which yeah.
I think we have difficulty hearing you, Nigel, but if I heard you very well, or if I were to pick up on what you were raising, I think this question, it might be part of what Loiso raised as part of his presentation when he was talking about the uptake of cooperative models in South Africa. Why is it so low as compared to the developed and Western world? I mean, if you look at Europe, the majority of European citizens, even in North America, the number of people that are part of credit unions, there are so many. And you are talking the affluent and the rich. They are part of these cooperative enterprises in the form of, credit unions, in the form of SACCOs, the savings and credit unions in Africa and in Europe. Why are their models? I mean, even Germany, you look at France, Loiso make mention of Italy and Spain. Why are those cooperative models in this developed world so appetizing for members, for just people across the different LSM to join these enterprises, as opposed to, say, for instance, like in South Africa, where you have got a very increasing middle class and you have got such a huge poor people, and the affluent are a little bit small or fewer. What is it that is making the South African environment not so much conducive for these successful cooperative models in the West, not appealing to our South African citizens, or in Southern Africa for that matter, because not many in Southern Africa are part of this cooperative enterprise, including cooperative financial institutions. Over to you.
I would like to come in on the last speaker on some of the things that I think I picked up, as you have also alluded to explain his point. I think it is at this point it is very important in South Africa that we look beyond our borders. We look for lessons and inspiration outside South Africa. Because as you have said that certain models have worked well outside the country, but from a distance, you look and be like, no man, this will be very, this will fit in the South African context like a hand on a glove or a glove on a hand. Despite the disabling environment perhaps, but that's the first step that we can take as people that are at the forefront are taking a lead in the cooperatives. Secondly, there is a need to raise awareness. After making that step, of course, there is a need to raise awareness in our societies, because that is exactly where the cooperatives are supposed to be mostly used. That's where they are supposed to be effective, but people will not have interest on something that they are not really aware of. So there is a huge room for awareness campaigns and educating the communities with regards to what is it that the cooperatives are bringing on board that differs to what has been there. And with that said, you cannot educate others if you have not been educated in the field. So those who are at the forefront, those who are leading these initiatives, need to do they need to equip themselves. They need to be well off in terms of knowledge across before they can actually share that information and make it attractive to our people in our respective societies. I think one point that I also picked up with the first speaker before our last speaker that I would like to put across is just a one sentence, just to say that there is enough room, I think, for cooperatives to raise their capital. With that said, it doesn't necessarily mean by working with external sources you are depriving yourself, but as much as you are getting external support, or you are raising your capital through other external sources, all that you need to look after is to maintain your autonomy. As long as that is maintained, I think that's what is important. Then you can look if there are ways that you can raise your capital in your respective places. Therefore, you might as well go for it, because the nature of cooperatives do not exclude you from doing that, do not prevent you from actually doing that. Thank you.
Prof?
If I can quickly try and sum up. Firstly, I think it's very important to remember that each type of institution has its own goals. And I will come back to the fact that cooperatives by nature and definition cannot run away from its social goals. That is embedded in the nature of a cooperative, because one of its ultimate goals is the welfare of its shareholders, are its members, if you like. So I think we need to bear that in mind. And for that reason, cooperatives cannot operate on the same model as shareholder banks. They are completely different entities. I think that needs to be borne in mind. Having said that, there are several models of cooperatives, CFIs particularly, that have been used in the world. And I think one of my contributions to the discussion of why they may not have been taken up so much in South Africa is the first. I think we should not forget that although the financial sector in South Africa is very well developed, it's very deep, it is also a young market in terms of post-democracy, right? So it's still a growing market. So we should not forget that. And then also another thing to remember is that because it is young, there probably hasn't been enough room to experiment. And the little that I'm not very conversant in terms of the specific types of CFIs that exist in South Africa. But what I have seen is that perhaps we need to move with the times. And because a CFI is a financial institution, it has to change. Financial institutions change with innovations, with changes in payment systems, with changes in supporting infrastructure. It's one of the most rapidly changing institutions and one of the most integrated institutions globally. And so we have to change with the global markets, otherwise we will remain behind. So if I look at a financial cooperative, its capital base is the deposits from its members, right? However, the provisions, the policy provisions, the legal provisions do not stop cooperatives from engaging in activities that would be profitable for the cooperative. To rely entirely on lending, I think would not be a very, depending, I suppose, on the type of business model that you adopt, but it would not be a very prudent business model for a cooperative, because a cooperative by nature is going to have lending rates that are lower than banks. So you cannot compete on interest rates with banks. It just would not work. And so when you look at the models that exist, you have Retail CFI is where the capital is provided by the savings and the deposits of its members, but they then take that capital, lend it out, but take some of that and engage in retail business as investments, right? Which is, I think, part of what you were talking about, our host was talking about, creation of intergenerational wealth, not by lending only, unless you're a cooperative bank, but by engaging in other investments, which include retail businesses, in order to generate profits for the members. So that's really important. Then you've got investment cooperatives, which will raise that money from the deposits of the members, but will use that then to make long-term investments, which again will raise profits for the members. So I think it's important to understand that the different models that can be adopted, they need to be localized depending on the nature of the financial sector that we're dealing with. And just to, yeah, so I think I've also addressed the other question that was raised by Mr. Chacha in terms of what models can be used to make them more profitable. In my view, it is the non-reliance on lending, because already your members are low-income members typically. So you need to find models that support the creation of wealth outside lending to your members.
I think Prof. and Loisa, you are correct. I think from GCI point of view, yes, we have gone beyond thinking about lending as a source of building that intergenerational wealth. We bought land that we are converting into a commercial piggery for that purpose, to make sure that we are able to generate that wealth for our members. It's one of those initiatives that we are moving into. I mean, out of the money that we have pulled together, we have bought this land for cash. That's why we can even use that land as a collateral in terms of us raising more money to be able to support this profit generating opportunity that we are looking into that space. And I think one would have to say we are almost at 5 o'clock, and we had said we'll finish at 4:30. One will not have sufficient words to thank our guest speakers, Mr. Loiso Asiko and Prof. Smatele, for coming through and help us navigate through this question. And I think this should not be the first and the last time that you join us in conversation of this nature. Mr. Loiso, you have said as cooperative members, we need to be equipped to be able to go out and equip those that needs to be part of this movement. And I think we'll take an opportunity to say there will be an opportunity that we want to create, and you come and talk to us as global change investors members, so that we are also made aware of some of these successful models and possibly be able to polish the model that we have currently in terms of how far and to what extent it will be able to generate that profit, be able to bring forth that intergenerational wealth creation without us having to depend on the lending that we are likely to, I mean, during COVID, like you said, I think is it a Prof. of Loiso that says many of those that have money, they will opt to pull their money out of the bank rather than put it inside the bank. It's a challenge that I think it's one of those things. And we have seen it, I think, from yesterday's speech by the minister. The minister said that even if the Reserve Bank has availed that much money, as per the announcement with government of 500 billion as stimulus, the offtake of the money that is currently sitting within our commercial bank, it's so low. And that's why they've even removed the threshold of 300 million, which is just an indication of the extent of the challenge that our economy is facing. And on that note, I'm not sure if you'll have one parting shot before we close this conversation, but we are thankful from GCI, Global Change Investors, that you have managed to come through and help us begin to understand our environment better, particularly as agents of financial inclusion and economic empowerment. I'll give you a minute each to give us the parting shot so that we can be able to close the conversations. Over to you.
Thank you. I will conclude by quoting the president. It is now in our hands. Opportunities, opportunities that we never had before are now at our disposal. It is up to us now to generate those opportunities and contribute towards our generational wealth. And I think such platforms are quite eye-opening, even for me as an individual. And what then we do after this session will determine how our future will look. Thank you.
Right. Yes, I don't think I have wiser words than what Loisa do say. It's definitely in our hands. Yeah, I think that is a really important thing because, as I said earlier, we are operating in a capitalist environment, and we can't forget that. And one of the inevitabilities of a capitalist environment is that the marginalized are going to be left behind. And it is an opportunity for CFIs to ensure that the marginalized are not left behind, while at the same time creating wealth for the members. And I think that is a really important role that CFIs have, and GCI, I think it's fantastic that you're creating this platform for having these conversations. And perhaps it would be great to invite other CFIs to also join you in these conversations, because one of the things that we will learn from the European counterparts is networking. The fact that CFIs tend to be localized either by industry or by region means that you actually don't tend to cross each other's borders. So you can easily cooperate with other CFIs without competing, and that creates a greater pool for you to grow and fill this gap that is going to grow definitely as a result of COVID-19.
On that note, fellow cooperators, our guest speakers, let's call it a day. We meet in 2 weeks' time on a Thursday from 3 o'clock in the afternoon. We'll be in this space on the 9th. Is it the 9th of July? Yes. We are coming back on the 9th of July. We'll still be exploring another area which can enable us or help us cooperate more. We do not compete as cooperative enterprises. We collaborate and cooperate. Thank you, and have a blessed afternoon, a good evening indeed. Thank you.